Well, it's time now for Business Update, and for that I'm joined by Delano D'Souza. Hey, Delano.
Hi, Molly.
All right, we're going to get started with some news of oil giants really starting to feel the pressure.
That's right, Molly. This time last year, the price of oil was $88 a barrel. Today, U.S. crude is worth $44 a barrel. Now, while the budgets of oil exporting countries are taking a substantial hit, global oil majors too have started to feel the heat. Mark Thompson now reports on how European players, BP, Shell and Total, are all tightening their belts.
Billions of dollars of spending and thousands of jobs are set to be cut as energy companies tackle falling oil prices. The cost of crude is predicted to drop for a seventh straight month in January. It's now less than half its $100 per barrel value last summer. Total CEO Patrick Pouyanné told French daily Le Monde the company is aiming to cut its exploration projects by almost a third. He said, over the last 2 years, we spent $2.8 billion on exploration. We will reduce that by 30% in 2015. It's a pinch being felt across the board. BP says it will freeze pay this year, that after announcing a $1 billion program to cut thousands of jobs globally. Elsewhere, Shell's quarterly net profits are down 57%. The company says it now plans to cut or delay around 40 exploratory projects worldwide, saving around $15 billion.
So we have launched already, before the oil price drop, the need to restructure the business model that we have for our North Sea operations.
The falling prices are predicted to boost world economic growth by up to 20% this year. But for oil-producing countries, it's causing problems. The market's volatility has hurt the Russian, Nigerian and Venezuelan economies in particular. OPEC will meet in June to decide whether or not to cut production to help boost oil prices, a proposal they rejected in November.
The president of the Eurogroup is in the Greek capital. Yoran Disselblum will be meeting the Greek Prime Minister Alexis Tsipras and the Finance Minister Yanis Varoufakis. The interaction effectively marks the start of the country's negotiations with its creditors. Global markets will no doubt be keeping a close eye on any developments from that meeting. Let's get a check on how the markets are faring now. Russia's MISEX up around 0.5% after the central bank cut its key interest rate to 15%. In December, the bank had surprised the markets by raising interest rates from 10.5% to 17%. Business leaders and government officials have been calling on the central bank to cut rates to stimulate growth in the sanctions-hit economy. Meanwhile, all the major European indices in the red at this hour. Shares reacting to company earnings and important data released for the eurozone this Friday. Lower oil prices pushing annual inflation in January down 0.6%, but unemployment figures did show a slight improvement, falling to 11.4% in December from November's 11.5%. Let's take a look at some of the other business stories making headlines at this hour. Qatar Airways has announced it's picked up a 9.99% stake in IAG. International Airlines Group owns British Airways and Iberia. The Gulf carrier signaled it may consider increasing its ownership over time. The stake in IAG will help the airline further develop its westward strategy. Internet giant Google has disappointed investors yet again as it reported lower than expected fourth quarter earnings. Revenues came in at $18.1 billion. The company blames a stronger currency for lowering this figure by nearly $468 million. Ad revenues have also declined as advertisers aren't willing to pay as much for consumers who use Google on smartphones. Big spending pays off at e-commerce giant Amazon. The company surprised investors with better than expected earnings. Revenues in the fourth quarter came in at $29.3 billion. Membership in Amazon's Prime service went up 53% despite an increase in prices. Now it's that time of the year again when the biggest brands in the business pull out all the stops for a mere 30-second ad spot. We're talking about Super Bowl Sunday, of course, which is expected to draw in a television audience of 110 million viewers. Mark Thompson explains why advertisers insist on spending the big bucks during the game.
For advertisers, the Super Bowl isn't just a chance for competition on the pitch. This year, companies are spending up to a record of $4.5 million for a mere 30 seconds of prime airtime. Well over 100 million people are expected to watch the NFL game between the Seattle Seahawks and the New England Patriots on Sunday.
There's really no other platform, no TV show, no YouTube video, nothing else out there that has that much reach and that big of an audience. And there are people who tune in just to watch the commercials. There's no place else out there like that, that you can get your brand out there where people are paying attention.
With so much relying on such a small amount of airtime, advertisers have focused on messages of unity and overcoming adversity. Celebrities like Pierce Brosnan and Lindsay Lohan will star in self-deprecating skits.
Driving in a beautiful car up a snowy mountain road. We're going 200 miles an hour? 30.
Many companies have already started their campaigns online.
Every advertiser is attaching some sort of hashtag to their campaign, just as a way to get people ahead of time to start tweeting and building buzz. And when you spend $4.5 million for a 30-second ad, you really want to get the most bang for your buck.
This year, 15 new advertisers will make their Super Bowl bow, a chance to show both competitors and the audience they're ready for the big leagues.
Now, with $4.5 million for a 30-second ad slot, it's no wonder that people like me are actually watching the ads before they actually are aired on Sunday Super Bowl. So
it's always interesting to see in the run-up to the Super Bowl how those commercials just really sometimes eclipse the game for many viewers.
Pretty interesting,
yeah.
actually.
Mm-hmm.
Delano D'Souza walking us through the business. Thank you for that update.
Thanks.